All right, welcome to another Forex session. In this session, we'll be looking at the flag pattern. The flag pattern. Now we have two types of flag pattern, the bearish and the bullish flag pattern. Now, we'll be looking at the bearish flag pattern in this lecture. Next lecture, we'll be looking at the bullish flag pattern. Like I told us, most of these patterns are just retracement. They're just retracement. And the break of it and the retest of it is a good entry trigger. Okay. Now, in this case, if you look at your screen, you can see a bearish flag pattern being formed. Now, like I told us, no matter the pattern that is being formed, always wait for the break and the retest of the structure, whether vertical or horizontal structure that is being formed. Wait for it to be broken and retested. Okay, so I don't want us to complicate things. Okay, you don't have to complicate things. Now, in a downtrend, once you see a reversal, after an impulse move, retracement, impulse move, retracement, and sometimes the retracements come as chart pattern. Just like what we are seeing on our screen, you can see the market is a bearish market, and the market started retracing. Okay, now you just wait for the break. This is the break of the retracement. This is the break of the structure. This vertical line, vertical support level was broken. Now, this is not your entry. This candlestick is not your entry candle. Like I told us, it must break and retrace. Now, this candlestick is not your entry candle because this is just a break. The market can break and find support in this area, and continue to the upside, and that's how you'll be stopped out of the market. So this candlestick is not your entry candle. You have to always respect structure, no matter what. You have to always respect structure. Always respect structure. Okay. Now, following the law of structure, this is the break. Now, after we see a break, we wait for a retest. Now, this is a level of price action. This is also this is a retest. This is a retest. Now, why I wouldn't enter from this candle, this is another reason. If you check, there is an horizontal structure around this level. You get it? Now, if you are entering at that candle, then you are going against the law that states that only sell at resistance, buy at support. Now, if you are selling here, you are selling at support, which is against price action law. So price action law does not lie. It does not lie. Just that many times we don't understand how it plays out. Because there's a structure below here, I have to wait for that structure to be broken, which this candlestick broke it. And at the close of this bearish candle, that is my entry. At the close of this bearish candle, that is my entry. Okay. And my stop will be somewhere above this level. Then my take profit is around this level. 1:2, 1:1.5, 1:3, depending on where the market is. If the market is just starting the trend, I will know that yes, I can target 1:3. But if the trend has been there for some time, I should be targeting 1:2, 1:1.5, or 1:1, as the case may be. But don't go less than 1:1. It's not advisable. It's not wise. So if you can see, this is my entry. This candle is my entry point. This candle is my entry point. Now, even if I have entered, you saw what the market was doing. There will always be liquidity in the market. So that is what happened there. You are seeing this point. This is what happened because most people will put their stop loss at this weak rejection candle. That is where most people will put their stop loss. 80% of traders will put their stop loss around this level. And what happened? The market stopped them at cost liquidity in the market and continue to the downside. That is why I always tell my students and co-traders that let your stop, give your stop chance. Let there be a chance for the market to do what you want to do. let there be chance for the market to do what you want to do. Like if my stop is around here, I don't have a problem even with what happened. You saw what happened. My stop is still fat. Now, but I always give advice, which is very important. If you're using a wider stop, use a smaller lot size. Like if this is my stop, if I want to use this level as my stop level, if I'm using 0.2 here as my stop, if I decide to increase the stop, then I should reduce my lot size to maybe 0.1, so that even if the market retraces and stop me out of the market, I will still lose the same amount I would have lost if I put my stop at this level. So the wider your stop, the smaller your lot size. Okay, so we are going to look into this particular area when we start talking about risk management. It's very, very important. Very, very important. So this is how you trade your bearish flag. This is how you trade your bearish flag. There is no two ways about it. There's no two ways about it. This is the only way to trade your bearish flag. Like I told us, we can make this our only trading pattern. And I tell you that you will also be profitable. Sincerely. This is with the trend. Just follow the break and the retest of the structure. That is the only thing. Don't get carried away with a lot of things happening in the market. Just follow the break and retest and you are good to go. All right. Happy trading. Keep practicing. See you in the next lecture. Bye.